All right, Prosus. Happy Sunday, guys. I wanted to do a video about Prosus because I bought a 5% position on Friday as the price fell to a fairly low level in the last week. And the price of Tencent, which it's related to, did not fall nearly as much. So the discount gap widened significantly between Prosus and Tencent. And well, Prosus basically fell into a range where I thought, I think that's in no-brainer territory. And I'll explain why in this video, some of the ideas that I have around it that hopefully are different than some of the stuff we see on YouTube, because there's a lot of good content out there about Tencent and their valuation and a lot of the good reasons for buying Tencent. So yeah, I'll try and add a little bit of value by talking about some other stuff that I haven't seen in very many places or at all. Yeah, but really I think that the general idea here is that Prosus has fallen to a level that's it's in the range of the 2020 lows. Just between in March when everything was collapsing. And my view on it is that it's the underlying asset, the important asset, Tencent, has actually grown 50% in terms of revenue since that time. And so we're getting a price for Prosus, the same price 2 years later, where the company is 50% bigger. So my general thesis is if it was a good value at those low levels in 2020, well, it's a great deal now because it's bigger and it's better after 2 years of work. So yeah, with that being said, I'm going to move on to some of the ideas here. Obviously, the only thing that I'm really looking at here is Tencent. I know that Prosus owns a lot of other companies. I think they own 80. They have 80 other investments, but I haven't researched those investments, and I'm not buying Prosus because of them. I'm looking at those as bonuses. They're kind of like lottery tickets. Just, if one of them works out, great, fantastic. If not, I'll get the asset that I want here at what I think is a really good price and a really good value. So one of the things that I was looking around quite a bit, and I think this isn't actually common knowledge, but I think a lot of people know it, but it doesn't seem to be too readily available. The actual market cap of Prosus, as indicated on most of the sites that I looked at, look at Google or Yahoo or whatever, and the market cap on those sites, I believe, is actually wrong. I'm a member of Sven Carlin's his research platform, and he put out a note one day with a message that he had sent to Prosus asking what their actual share count is. So I'll put that on the screen now, and I believe it's 1.477 billion shares outstanding. So if we do the actual calculation of I've got to pull it up here. If we do the actual calculation of the market cap, on Google it says it's 113 billion euros as of right now. But if we multiply the 1.477 by the price of the stock, then we actually get a market cap of 80.5 billion euros, which is off significantly. That's off by about 28 or 29%. So if we were looking at Prosus based on the market cap, it's actually a much better deal than it appears when you look online. So that's the first thing I wanted to point out, because I think that's a really important piece of information. If anybody out there thinks that's wrong or has reasons to believe that that's wrong, please put it in the comments. But it's what I'm working off right now. Okay, and then what we have is what am I going to do next? I'm going to look at the Prosus discount to the Tencent holding. Okay, so what this is me ignoring all the other investments in the company. This is me saying I'm not putting any value on them. All I'm doing is I'm taking the Tencent market cap and multiplying it by the amount that Prosus owns, which is 28.9%, but then adjusting that for the actual market cap of Prosus. So if we do that, what happens is we come out to a discount of 40%. So that means if I buy Prosus, I get a 40% discount just on buying Tencent shares, and I get all the other stuff for free, all the other companies they own. So that's a pretty big discount. Okay, and then what we're going to look at next here is this is how I'm valuing the company. So it's the Tencent earnings that Prosus is entitled to. So Tencent in the last 12 months, trailing 12 months, earnings were $29 billion US. Prosus stake is 28.9% of that, so they're entitled to $8.4 billion in earnings. And if we compare that against the US dollar market cap of Prosus, that's the adjusted market cap with the correct share count, that shows that we're getting a PE multiple just on Tencent earnings of 10.6. So I'm looking at that and I'm saying, well, that is an incredible deal for a company that I believe it's just an incredible company with a massive moat and huge growth prospects. And again, I'm not going to explain the whole thesis around Tencent, and explain why it's a fantastic company. But assuming you've done the work on that and you believe that Tencent's a pretty good company or a great company, then a 10.6% earnings multiple is incredibly cheap. Now, this doesn't mean that I'm looking for this discount to close. I think I'm going into this investment thinking this could possibly just last forever, and am I okay with that? And I'm saying, okay, well, I'm getting a 10 multiple, a 10 PE multiple on earnings, plus I get all these lottery tickets. I'm happy to own that, even if the discount persists. Something tells me it won't persist because I know that Prosus and Naspers are really intent on getting rid of the discount. So I think one day they'll figure something out to get rid of a lot of it. But for now, I'm just saying, okay, let's assume that discount stays, and this is what I get for it. All right. One of the big reasons the second thing I wanted to talk about was one of the reasons I like owning Tencent is that because I own Alibaba, I have the opportunity, if I buy Tencent, then I get a real stranglehold on a few key industries in China. So I get cloud for one. So I'll put the image up here to show how much of the cloud they control together. And I think we all know that that's a massively growing industry, but just in case you don't know, I'll show what Alibaba's expectation of the actual market growth for cloud is in China. And I believe it's 37% per year until 2025. So those are incredible tailwinds in an incredible business with high margins. So if I own Tencent and Alibaba, that gives me a huge foothold in that market, which I really like. The second industry I get a big foothold in is in payments. So between Alipay and WeChat Pay, that is it's kind of like the Visa MasterCard of North America or any other Western country. So many of the payments in the country go through those two platforms that it include what you get is you get the massive tailwind behind the Chinese consumer. So I really like payments. I like them because they're low variable cost businesses where it doesn't cost you a lot to expand your business. You just have your fixed costs, and then the margins are really big on any growth. So I really like that about those. And I just like having a foothold in those two industries. Related to that is not related to those industries, but related to that concept. I do like that I have JD.com as well within Tencent, because I own a lot of Alibaba. I like having a competitor as well, because I know that industry is just, it's just growing like crazy as well. And if somehow JD figures out how to destroy Alibaba, then I'll end up, maybe I don't win, but maybe I cut my losses a bit. Yeah, so there's that. But those two toll booths are big deal for me, and I really like the idea of owning cloud and payments in China. Okay, the third thing I'm going to bring up today is Monish Pabrai. I watch Pabrai a lot. I'm not a cloner, but I do watch what gurus do, and I do use them as people to get investment ideas from. So if I get a good idea from somebody, or get a good idea from one of them, I'll research it. And if I really understand the business and I really feel like I get it, and I'm really confident in the actual investment, I'll make that alongside them, or hopefully at a lesser price. But one thing I don't do is I don't buy, I try not to buy stocks at higher prices than, let's say, the guy like Pabrai pays, because his analysis might be based on a certain price. I mean, there's a price where a certain investment is a good deal, and there's a price where some of them aren't. So for instance, I just bought Seritage at a price that I think Pabrai bought back in right around that price in 2020. But with Tencent, he made a fairly big purchase. I'm sure everybody's aware here, but he made a fairly big purchase in Q3, and I think he bought more in Q4. I'm not sure about that, but I believe he has. And the price now, if I look at Prosus, it's actually trading at a price that in Q3 was about 33% higher, the average price in Q3 than it is now. And the low price in Q3 was 20% higher than the price is now. So I'm confident I'm getting a better price than Monish Pabrai. And I believe he's probably put a lot more work than I have into it, and he's willing to put a large stake in it, which gives me more confidence in my position. But like I said, I'm not buying it because he bought it, but it just gives me a bit of extra confidence in the position. So the fourth thing I wanted to talk about is that, I guess I just wanted to go over quickly about the quick investment case. And again, I suggest if anybody wants to really learn about Tencent, who doesn't know a lot about it, there's a lot of good write-ups. Investing with Frank did some good videos on it. I think he's done some good podcasts with interviews that he's done on Tencent, which are quite interesting. And also, if you want to see the Pabrai videos, I think it's on Simply Money. I'll put the video link up in the description, but he did a really good set of interviews with these guys and talked a lot about selling his Alibaba stake and buying Tencent and his thinking around Tencent. So if you really want to understand the moat that Tencent has, I really highly suggest that thing. But just very quickly, I'll touch on it. They have WeChat, which everybody knows. It's this platform that everybody's on, an app that's on, everybody's on. That's their main bazooka, as Pabrai calls it. So they can basically promote their other businesses through WeChat, because everybody's on WeChat all the time during the day. And so it increases the chance that their investments they make in these smaller companies are actually going to, increases the chance that they'll work out, because they have a really strong advertising channel through WeChat. They are the games leader in the world. If you exclude console sales, I think they're the biggest games company in the world, with such companies as Riot and Epic Games. And so those two companies, they make League of Legends and Fortnite, which are two of the biggest games in the world. And then they have scores of other companies and games under their banner. So yeah, look into that if you're interested in the games side of their business. And the last thing I'd mention is and this is the thing, I'm not putting any value on this really. but they have a massive investment portfolio. So when I was looking up, it says that Tencent owns over 600 companies. And correct me if I'm wrong. Send me a chat if that's wrong. But I think that they are over 600 companies that they've invested in. And Pony Ma has shown in the past that he is quite good at allocating capital, and so probably some of these are going to work out. In fact, a lot of them have, but I would say some high probability that some more work out. So if we take those 600 plus companies and add them to the Prosus 80 companies or so that they have, you basically have, 680 plus lottery tickets to, if one of them becomes a $300 billion company, then you've added 50% to the market cap of Tencent. But again, I'm not valuing that. I'll dig into them at some point. I'll dig into some of the individual companies, but I'm not a tech expert at looking at the future. I'm not good at predicting what trends will work and that kind of stuff. So I'm just basing this on what I can see, which is massive growing cash flows, big moats in the businesses they have that are basically entrenched in China and actually throughout the world. I wonder if that's it. I think that's it for today. But basically, my main message is that Prosus shares are trading at an even bigger discount than it looks like. I'm saying it's 40% just on the Tencent stake alone. So if you're interested in Tencent, I suggest taking a hard look at Prosus. All right, guys, thanks very much, and see you in the next video.